In the summer of 2008, we saw the oil market skyrocket to just shy of $150 a barrel and shake the financial markets forever. Rising oil prices put tremendous pressure on middle-class consumers and hurt the economic health of countries worldwide. This contributed to some of the most difficult economic times our generation has ever seen, and the markets were in chaos for several years. Eventually, the dust settled and things calmed down, but the markets had a rough ride for several years during the Great Financial Crisis. Now, fast forward to the 2020s. We have some scary news to share with you. Déjà vu is an expression derived from the French meaning already seen.
Déjà vu.
And here in 2022, we're getting a lot of déjà vu. We think oil is headed to $150 a barrel once more, and in this video, we will be using history, data, and charts to back up our prediction. Before we dive in, please take a moment to consider subscribing to our channel if you enjoy our content and hitting the like button down below. For many new traders and investors, the times we're living in are entirely foreign to us. We are seeing inflation levels not seen since the 1980s, experiencing the beginning of a hawkish Fed hike cycle, and seeing stocks tank by incredible amounts. Take a look, for example, at some of the major stock names on the screen. These once indestructible names have tanked by over 50%, and there seems to be more rocky days ahead. So now, let's narrow in on oil. How has oil done in all this turmoil? Despite the major corrections, oil has thrived, driving higher consistently since its lows in 2020. Oil has performed so well, in fact, that companies like ExxonMobil and Chevron are some of the names attempting to pop up in the S&P 500. So, if oil has already made a major move, why would we consider buying it still? We think the answer lies in a simple supply-demand observation. Let's talk about Russia.
Look, Russia is a huge oil producer and also a very large natural gas producer, most of that exported natural gas going to Europe. So if there are some kind of sanctions, or if Russia were to try to weaponize energy in this case by, for example, withholding natural gas shipments to Europe, that could directly affect energy markets. So traders and investors definitely need to be thinking about this.
Thursday, February 24th, 2022, Russia invaded Ukraine, and with it, set off massive suffering and supply line issues in the Eastern European theater. As tensions mounted, the world braced for what genuinely looked like the beginning of a third world war. This topic is of course a sensitive one, and we would like to take a moment to recognize the very difficult and terrifying situation over there. For this video's purposes, we will be objectively looking at the financial market repercussions that this invasion triggered. Even for someone who's brand new to this stuff, it's probably pretty easy to understand that an invasion could cause some issues for the supply of oil globally.
When we look at this morning, the stock market already in Asia and in Europe, markets are down. Futures markets in the U.S. are pointing down. So yes, a good morning, but not so much for those who are worried about the economy. The stock market likely going to take another leg down today because this is obviously a huge international disruption. One of the main places, Hoda, we're most concerned, as you just mentioned, gas prices. Brent oil barrel now over $100 a barrel.
A quick refresher when we're talking about supply and demand. If there is less oil being pumped or distributed globally into the energy trade, the price will go up. In 2020, we saw a different scenario in the oil market. Supply suddenly became abundant due to consumers being forced to stay home during lockdown, and global supply lines began slowing due to the pandemic. This caused oil to go down dramatically, and we even saw the futures market go negative for the first time in market history. With the Russian invasion of Ukraine, we saw many NATO countries react by placing heavy sanctions against Russia. Countries like Germany, France, and the United Kingdom. This refusal to do business is an attempt to motivate Russia to look for peaceful resolutions without launching full-scale war across the globe. Of course, this is a very complicated topic, and not one that we will speculate too much on. However, oil prices have steadily risen since this invasion due to Russia's massive yearly export of oil. Now, we have a troubling situation. With this conflict in Eastern Europe and the reopening of the world economy due to the pandemic being behind us, we have a massive demand for oil and low supplies. This is why when you go to the gas station, we see some wallet-punching numbers.
I did when their prices were $4.69 for regular in some spots. In northern New Jersey, in a corridor where there's a lot of truck stops and things, and they knock themselves over the head competing for the lowest price. And the prices are unbelievable. Diesel fuel, if you have a diesel pickup truck or workman's van, $5 plus already, and it's only going to keep going higher. And this is really upsetting to people. I mean, when it costs you $100 plus to fill up your SUV, that's when the howls start to go up and people get really concerned. And then when you drive your car to the grocery store these days and see those prices, it's unsettling, and it's going to hit consumer confidence hard, in my view.
China specifically has begun reopening, which could play a major role in an increasing demand for oil as well, considering their population makes up a staggering worldwide percentage. So now that we've gotten caught up to speed, what's the next big move? What do we plan to do with all this information? At A1 Trading, we do a tremendous amount of market research to share with our audience and use in our own in-house trading. We're a small team based in Atlanta, Georgia, and have been tracking the commodity market closely since the 2020 market correction. For us, oil follows under the category of innocent until proven guilty, and until we see proper signs of a reversal, we're still bullish on the commodity. Our plan going forward is to look for bullish setups, specifically focusing on momentum-based short to mid-term trading opportunities. As we focus on a wide arrangement of tradable markets, indices, commodities, and currencies, we'll be looking for opportunities that maintain a strong correlation to the price of oil. In this case, the Canadian dollar. We maintain a bullish outlook on the Canadian dollar due to its strong correlation to the oil market, since Canada is a major exporter. Here's an example of a trade taken by one of our top traders, 𝗀𝗂𝗯𝘀𝗃. Nick took a sell trade on EuroCAD, selling the euro and buying the Canadian dollar, which resulted in a nice profit. This is one of his favorite pairs to trade.
I don't want to cancel it. I want to actually close the position and close the position. We are out of the trade and all done. I don't shy away personally from closing out of positions that I don't have a strong belief in anymore. I personally am a big fan of holding on to winners. There's very few reasons where I will just take a trade because price is moving in my favor, but there are situations in which I will close a position that's going against me because I no longer want to hold the trade. And at this point, what I've done is I've closed out, I've taken profits because I think that the EuroCAD has a relief, a push to the upside coming. We've seen some of that structure break, and we're already kind of seeing this market. Now, I could be wrong about that, and perhaps I look to re-enter, but I've decided to close out of my trade and save myself a little bit of extra money. This trade was a very profitable trade. This was awesome to watch on play out. We just continued to see this thing move lower and lower, and I was able to make some pretty good money on the trade. We'll pop up the profit here somewhere in the 500s, which is awesome.
Our team shares all of our trades inside our private Discord community. Right now, get access to every trade we take in the form of a notification on your phone or desktop, and you can see our live analysis of what trades we're taking. Additionally, you'll be able to get involved in our active trading community, full of serious traders from around the globe. Down below in the description, make sure to use the promo code A1YT at checkout to receive a huge subscriber discount. On the screen now, we wanted to shout out a few of our recent new members. By joining our VIP community, you're getting access to our service, but you're also supporting our research and content here on the channel. Thank you to all.